I spend just 60 minutes a day trading, and on a good day, I can make over $5,000 in that single hour. But I didn't start risking thousands of dollars per trade. I originally built this strategy just risking $50 per trade. And recently, I went back to prove it again and turned a $50 account into over $3,500 in just 21 days using this exact same system I still use today. And what most people don't realize is you can actually get started with as little as $4 now. Learn the strategy that I'm doing with tiny risk and scale it step by step, all the way to trading even larger size than I do now. The strategy is super simple. The time commitment is small enough that it works even if you have a full-time job. So let's get into exactly how you can start day trading with just $4 and what the growth path actually looks like to scale from that tiny risk all the way to trading at the level I am now. So we're gonna go over the 4 major steps to get you started on this process, what you actually wanna be trading, how to get started trading with just $4 of risk, what your trading plan will actually be, and then how to actually scale your account to making consistent money. Because again, when you first start out trading, it's not about making money initially, it's about practicing your strategy and learning. And then you can get to a point where I am, where you are risking a lot of money, but making even more. So what are you actually going to trade? Because there are so many things and assets in the market that you can trade successfully. You can trade stocks, you can trade options, you can trade Forex, you can trade crypto, and we're actually not gonna trade any of those. We're actually going to trade futures. And if you don't know what these are, they are just another trading asset like crypto, Forex, stocks, or options for starting with a small account, beginning traders, and as well, they allow you to scale over time. You can basically trade 24/7 with them if you want. You know, again, I only trade 60 minutes a day, but you can trade these more if you want. There's no small account restrictions. That's the problem with trading stocks is a lot of times you have run into something called the pattern day trading rule, where you need over $25,000 in your account to consistently place a lot of day trades. Now, like I was talking earlier, it's super scale friendly. Just to pull up a quick chart here, you can be risking under $20 on some of these trades, but then you can also increase your risk way more. So you can start small, but then you can also do the exact same thing, and you can see these charts look the exact same, but here I'm risking $1,500 instead of that $20. And so it allows you to execute the exact same system on the exact same chart, but just scaling and changing your size, which makes that process of scaling extremely fluid. Now, what futures markets are is they are extremely liquid markets, which makes them really powerful for actually trading. You're not trading something like a penny stock or an option spread that can be really illiquid, where you can have fill issues. You can lose money based on fees or spreads. These are the most liquid markets in the world. And so you don't have to deal with any of that. You're trading things like the NASDAQ, the S&P 500, oil, gold, these huge markets you hear about all the time. But instead of trading the actual index, you're trading a derivative of them just called futures. And all futures are is they're essentially a contract agreement to buy one of these commodities at a future price. And so that kind of sounds complicated, but to show you the reality of what this looks like, here's a trade I recently took where I'm trading the S&P 500 on a 1-minute chart. And you can see it looks like, and it produces candles just like any other market. And you can actually bet the market's gonna go down, or you can bet that it's gonna go up. And so here's an example where I'm making money as it goes down. And so that's the beauty of trading futures, is you can get really big leverage like options, but if you've ever looked at options, they are extremely complex and there's so much that is so frustrating about them. And futures are so much simpler. They're just as simple as stocks. you basically enter here, bet the market's gonna go down, and you make money as it goes down. There's nothing complicated or added about this, and you essentially trade exactly what you see on the chart versus options have so many other variables. And so I find it extremely more powerful to do that. And again, there's the scaling that comes into play. And so you can see here, I'm at large size. And so this allows you to make a crazy amount of money in just a few minutes here. Each one of these candles is 1 minute. And so over, 15, 30 minutes here, I am, up just over $5,000, and it eventually closes out here. But that's the beauty of it, is you're able to easily manage the trade on the chart, get out when you want to, and it doesn't have a lot of complexities as other markets. And again, I'll show you how you can get started with a really small amount of money here in a second. And so let's go on to step 2 now, where we can talk about scaling your account, how you can start with a really small amount of money with $4, and then the process of scaling and the steps you're gonna take. So there's 3 main options you can take to get access to trading and practicing it and then starting to make money. Now the first one is demo trading. You can get started with this for as little as $0 to $4. And this is what I always highly recommend people doing, because when you're first starting out, especially something new like futures or any other market asset or strategy, you're gonna make mistakes. And I have countless people that have emailed me saying they started out risking a lot of money, tens of thousands, and they've lost it all because they're just making beginner mistakes. And so you have to get started with demo trading first, and then when you become confident, scale. And we'll talk a little bit about that process in a second. Now, a huge option that you'll see is prop firms. And in my eyes, these are a trap. They will generally cost you at least $50 to $100 per month or more. The concept of them is really awesome, but in the execution, they work against you. And so the concept of how they work is you pay a fee to get access to a funded account, where they essentially say, hey, here is $50,000 and you can trade with this money, and the profits you make with that money, you will keep a small percentage. And so they will allow you to do this for a monthly fee generally. Like, here's a great example of a prop firm that will give you a $50,000 account, a $150,000 account for a monthly fee. And so the risk reward of, hey, I can just risk $200 a month, but I get access to this $5,000 account. And even if I make $5,000 or $1,000, that is insanely good. But the execution of how this works, even if they'll often give you a coupon code to make this 80% off, that just gets you in the door. There are so many other fees associated with this that you are spending a lot of money consistently at the end of the day to actually not trade with real money. You are demo trading anyway, because they have it to where you are trying to pass these challenges. You have to pass multiple levels of challenges before you actually unlock a real money account and can get real payouts. And there is literally statistics that under 5% of people over time pass these challenges. And so really what you're doing is you're just paying a couple $100 a month to demo trade, because they're dangling a piece of cheese in front of you like a mouse. And so I highly recommend staying away from these, because it's just going to cost you a lot of money when you can just be paying $0 to $4 a month to do the exact same thing. Now, if you really want to do this, I'm not going to fully knock on it. If you start demo trading first and then you prove that you can be consistently profitable demo trading over a couple months, then you can switch to prop firms and try it out. But again, keep in mind and be aware that the way they're set up is not to allow you to win. They actually want you to lose money because it's in their business model and best interest too. And so instead of doing prop firms, I would recommend starting your own brokerage account. With futures, you can do this for as little as $300 to $1,000, maybe even less, but that's a really good starting amount. And what this does is it allows you to increase this slowly from zero money risk of demo trading to a small amount, like we saw $20 of risk. People don't realize initially, and what you'll learn over time is trading is very, very mental. Risking money is hard. If I go back to this example I was showing, you have to be able to handle seeing this amount of money move. This candlestick right here is like $1,000 swing. And I didn't start being able to handle that originally, right? I've slowly built up to this over time, starting at that small amount of risk. But that's where the mental side of trading comes in. And so even if you pass with a prop firm, you will be all of a sudden having to deal with these huge money swings with these prop firms when you haven't done the training essentially to build up to this. I have so many trades where I was risking $50, $100, $300, $500, $1,000, and now I'm risking $1,500 and I'm close to sizing up to $2,000 or $2,500. It's a slow building process to get there. And so that's another reason why people fail with prop firms is because you go from risking nothing to a crazy amount. Even if you're not risking it, think about it on the flip side. The amount of money that you can make is still in your brain and messes with you. And so that's why it's the most important thing to start this process like this. There are no shortcuts in trading. Anyone who tells you otherwise is trying to get your money in some way. Now let's go on to step 3 of building your trading plan and your robust system. So there's a few key things about creating a successful trading plan. The first thing is you have to choose your time frame to actually trade. And so for me, what I do is I'm day trading, and so I'm trading on a 1-minute chart a lot of the time. But I also use a 15-minute chart to look at the big picture, because what you'll realize over time is the small little patterns are not as important as understanding the big picture. The big picture always is the most important thing. Now, what you want to do is you want to figure out how long you're going to trade each day. There's a lot of different reasonings you'll go through in your head of why I want to trade longer versus shorter. Originally, a lot of the time in the beginning, I thought, hey, I should trade 6 hours a day because that means I will capture more trades and so I'll make more money. And that's not really how trading works. Instead, I've realized the sweet spot is somewhere between 1 or 2 hours. Because what you'll realize over time is trading is a decision game. You are making hundreds of decisions every hour, even if it's to do nothing. And what this does is it's very taxing mentally over time. And so over time, you'll get more and more tired and you'll make worse and worse decisions. And so what you want to do is, I've realized is, well, I would rather, instead of trading this whole time, and by the end of my trading session, I'll just be making crappy decisions, I'll probably put a loss on. It's better to just trade in this beginning amount of time where I am at my peak performance and I'm gonna make the best decisions possible consistently. Trading is a consistency game. You have to show up every single day and make the right decision. That is really hard to do. And so figuring out how long you're gonna trade every day is extremely crucial for that. And as well, risk reward is really important when it comes to trading. I used to start out scalping to where I was risking $100 to make 50. That is a negative risk reward ratio, making it really hard to consistently make money because every time you lose, you wipe out 2 trades. And so it's really important to understand how win rate and risk reward works and kind of where is that sweet spot. And this is kind of different for everyone. A lot of people like a 1-to-1 risk reward ratio because it's very easy to hit your profit target. It happens quickly. I found the sweet spot for me is 1-to-3 risk reward ratio. Now, of course, this kind of depends on the exact strategy you end up using, but for me, this allows me to be profitable with only a 30% win rate. And so mentally, that takes the stress off of every single trade to be right. You are going to lose trades in trading. And so I find it way easier to be risking $100 to make $300 because it takes multiple losses to wipe out 1 win. And when you have a win, it puts a lot more money in your account. And so mentally, it sets you up in the right way. That's the biggest thing I'm trying to do here for you, is set you up with the correct foundation to approach trading properly. There are so many ways to trade and approach trading, but if you don't set up some of these foundational things the right way, you are going to get lost and waste a ton of time trying to figure it out. Now, the last big thing is your strategy and entry checklist that you make. Every time you jump into a trade, you want to have a plan of what you're doing, why you're jumping in, where you're going to get out if it's a loss or a win, and how you're going to consistently repeat that every single day. Because if you don't have something like that, you're going to show up to the market, be watching it and reacting to the price movement and trying to take a long, trying to buy, trying to sell, and capture as much of every move as possible. This is a huge problem for me and other new traders, is you see all these moves and you think, oh my God, I can make money off of this move. I can make money off of this move over here. Oh, I don't want to miss out on this move. And what that ends up doing is you just end up losing money because you're being reactionary to the market, versus having a plan, looking for a specific thing every single day and executing on that plan when the market comes to you. That is the biggest light bulb moment I had in my trading, is not trying to make money from the market every single day. Instead, having a strategy that I know that makes money when it shows up, and waiting for that strategy to show up and the market to fit that checklist that I created. And so that's literally all I do every day, is I have an entry checklist that I look for the 5 key things. And if it shows up, I take a trade. And if it doesn't, I just move on with my day. For me and my strategy, I would probably take 1 to 3 trades a week. And the reason why is because really good setups don't show up that often, but I am patiently waiting for them. And when they happen, with the beauty of trading and scaling and size, well, you can make a crazy amount of money from them. And so you don't need them to show up very often. I think that's another huge trap that I fell into and a lot of beginning traders fall into, is because they're day trading, they want to be taking 5 to 10 trades a day. They want it to be really exciting, fast-paced, crazy amount of money. And that's actually not how a lot of really good traders trade. And at the end of the day, trading is boring, and it should be boring, because that's how good trading works. And that's how you're going to be able to mentally handle trading long term. And just quickly to walk through this 5-step entry checklist, on this trade I had, is literally every single morning, the market opens up at 9:30 Eastern Standard Time. It's actually 7:30 my time, 6:30 a.m. Pacific time, which makes it super easy to do this before a full-time job. Especially on the West Coast, you can literally be done trading by 7:15, and then go on with your day. But how it works is, all I look for with my trading is reversal trades. I look for a move up to reverse, betting that it's going to go lower, or I look for a move down to reverse, betting that it's going to go higher. I don't look for a breakout trade or a continuation trade, because I've realized that, again, everything with trading, the simpler, the better. And so with this trade specifically, there was a big move that the market had in the morning, and so I was looking for that to reverse. And so the market had a really nice trend here. Looking at the swings of the market, it was making higher highs and higher lows. The market actually opened up right here, and then from there it made a lower low here and a lower high. And what I mean by these, the major swings here, is an uptrend is, made by higher highs and higher lows. But when it starts making lower highs and lower lows, well, that is the structure of the market telling you that it's going to shift. And I found it way simpler to just not use any indicators and just read essentially the swings of the market like that. Also, I have levels here that are essentially reversal zones of major support and resistance. Once that happened, I looked for a confirmation of a big bearish candlestick. The market kind of broke the lows of that candlestick, and then I bet that the market was going to go lower. And you can see here there's a couple support zones on the way down that I'm looking as targets. I think, okay, maybe the market will bounce up here, but I can see and bet that maybe it'll come down to this major support zone. And so from there, I just managed the trade a little more fluidly. I go to break even at some point. It's really good to go break even eventually to take risk off the table, because I don't know, the market could come down here and just bounce and go up. right? And so there's no point in me losing money on the trade once it's got to a point where I think it's shown that it will work out if it does. And then from there, it's just managing with the trend. You can see I have a little downtrend line, and then it starts to get really kind of parabolic here to the downside, and I trail my stop up pretty tightly because you can see here at this point, as it spikes down here, I'm up basically $6,000, but it pulls back to where I close at $5,000. And so each one of these candlesticks ends up being $1,000. I don't want to have my stop all the way up here and give too much back on the trade. But I don't want to get into this too much. That's for another video. But this is the exact same strategy that I used risking $50 per trade. You can enter that exact same trade risking $50 or less. Now let's go on to step 4 of how to start with that small amount of money and scale your account. Now, the rough idea I like to tell people is when you first start demo trading is you want to see 1 to 2 months of consistency trading on a demo account. This gives you enough time to practice reading the markets, practice your strategy, practice entering, practice the trading platform you're using before you switch to real money. I know you really want to jump into real money and actually start making money, but don't focus on that right away. That is what so many traders do that ends up losing them money and washing them out of trading because they get too excited and jump too quickly into the real money. What you want to do is focus on the process, practicing your trading plan, practicing the strategy, and consistently daily executing, and even your trading routine. Getting used to waking up every day, opening up the charts, analyzing the market, looking for your exact strategy, and then also practicing with calling it for the day. It's hard to be done trading some days when you get close to a trade or it looks like there's gonna be a trade soon, but it hasn't shown up in your trade window. Those are all mistakes I've done before, and what I do now is because of all these mistakes. Now, when it comes to real money and trading platforms with futures, there's one thing that futures have that is a little different compared to trading options or trading stocks, Forex or crypto, is futures have something called margin. All this is just think of it like collateral. Because you're buying a leveraged asset, why they're so powerful is because they give you a lot of leverage. They allow you to trade these assets where generally to get access to control that asset would be a lot of money. But you're getting that same movement for a fraction of the price. But the beautiful thing about it, going back to the chart, even though you're getting a lot of leverage, you are still able to keep your risk really small based on putting your stop loss in a good spot. That's what you always want to do with trades, is you want to have a good stop loss. Now with margin, and when you get to opening a real brokerage account, is some of them have stuff called intraday margin, where if we look at here, to hopefully not have this be too complicated for you, as this is a huge graph of a lot of them, but what I trade is the ES futures, essentially the S&P 500 futures. And what futures have is they have the larger version, which is called the E-mini, and the micro version, which is the one you want to start out with the small account. And these have the margin requirement to be really small, $50 to get control of one contract. Think of a contract like buying a share. You know, in this trade right here, to show an example, I have 3 contracts. That's all that's showing, is you're just buying that many to get control, to keep your risk at a certain amount. And then when you trade up to a larger amount, you just need $500. And this is where it's really powerful for a small account, is to get control of one contract. Like in this example right here, if you controlled one contract entering in here with your stop loss here, you're only risking under $20. Margin isn't actually the risk on the trade, it's just the collateral that you have to put up. And so this can change based on where you enter of how much you're going to risk on one contract, but that's the beauty of futures. Now you want to make sure that you go with a broker that has these small intraday amounts, because if you look here, some of them, for here you can see the normal S&P 500 ES E-minis, they require $14,000. And intraday, they will generally be half of that at $7,000, versus the exact same thing on some other platforms that are smaller, it's $500. And then the micro one would be $50, and the micro one on this one would be still $700 just because it's a tenth of the size of the larger version. And so that's where the beauty of being able to trade with a small account. You just need to find the right brokerage to do that. And don't worry too much about fees because they're pretty competitive across all brokerages, being roughly the same. The biggest thing I always say about fees is don't overtrade. That's where fees eat you alive. If you are trading infrequently, going for larger swings, kind of like my strategy, fees do not matter. That trade where I made $5,000, I was at this fee rate. I think technically I was even at a better fee rate, but essentially at the worst case, it cost me $9 to make that trade where I made $5,000. That's nothing, right? And so don't worry too much about that if you are trading a robust strategy that doesn't over trade like 20 trades a day. Now, where you can get started with all this is the platform I've been showing you, and the platform I've used for over 5 years at this point is called NinjaTrader. It's a futures trading focused platform, and it's the perfect place to start practicing, learning your strategy, trading futures, and growing your knowledge from there. I'll leave a link in the description below for this as well. It's the platform that allows me to manage these trades very easily. You can enter in essentially on the chart, move your stop losses around by just clicking this and dragging it. And again, it's like I said, it's futures focused. It's really, really powerful for trading. This is where the $4 comes in of how you can get started for just $0 to $4 is NinjaTrader actually will give you live data for free for 14 days. All you need is an email to sign up. But after that, all you have to do is pay $4 to get access to data. Other trading platforms out there will cost $10 to $25 to get that same access just to demo trade. And that would be a monthly cost. And so I highly recommend checking NinjaTrader out to get started. Now, another really good resource I've got for you is a 90-day trader roadmap. I've gone through and created essentially a full step-by-step process of what you should be doing in the first 90 days trading to work towards becoming profitable, scaling your account, starting trading, and everything in between. Now, if you want to learn more about futures, my strategy, and take a deeper dive into this process, I've got a complete deep dive trading course here for free that'll walk you through every step, answer 90% of your questions for sure. You can check that out right here.